Nothing much, nothing much. Ready to check some stuff out, get ready for this Wednesday. Oh, so the four Fed speakers today had pretty much no effect. That's fun. You have a good day today? Play anything? Susio?
It's all right, man. I mean, it's the same frustration watching the micro bid tick by tick tape come back in and be successful. But thanks for interesting, and that NYCB play today was terrific.
Nice. Hell yeah, man. Well, do you wanna get into anything? Or
I mean, stick with the theme, dude. I'm generally early. I feel like I'm more often right, but than I am right on time. When I see stuff. So I'm looking at regionals, right? We're coming into March 11th when the BTFP expires. And I just kind of want to take a look at a couple of charts with you, kind of see the pattern you're looking at. I think this cycle is not so much about mark to market assets. If NYCB is an indication, it's about commercial real estate as a percentage of assets, because that's what really rocked NYCB. But look at NYCB and then look at I got a few others. I just want to glance at kind of the trend lines since March and kind of look at the pattern and get your thoughts.
this guy, NYCB or M?
N as in Nancy.
Got it. Okay, I've got it up. And what is this again?
It's a community bank. And my screen go? Well, they got super shaky.
Yeah, dumped off that earnings.
Because their commercial real estate portfolio, I guess, is just way too outsized, super shaky. So I've been watching them as they got back to the March lows, and once they kind of broke that, we're flirting with some momentum into that 6 level. I played it on that first day, and I took a good little profit on it. It bounced back a little bit, it continued down. So I kept it a while and played it. And today, when it really started being shaky right around 5, I'm always watching for these kind of canaries. When it was at 5, I took a stab at calls. I tried to fill bid and then they fill. So I just went ahead and slapped the ask for 15 and they filled for 13. So the momentum continued down and it never really bounced back. I just kept holding until it got in.
I was gonna say this thing had a really, really clean breakdown.
Yeah.
Right under this 560 area was nice. You didn't play the downside at all? You just bought the dip today? Oh, okay, cool. I was gonna say from a structural from a structural I was gonna say I wouldn't understand longs here. Honestly, it was purely by the dip situation because there's zero price action here historically.
Looking at this as, I think we're seeing as people off just against compete SVB. And that's what I look at in these regions. Like, where do people really start bailing out? And the ones that they're not going to fail, and you can feel it's back pretty strong. We saw that in WAL, we saw that in Zion, and only a couple went down.
Yeah.
But when this starts, right, when we see the first one really start to sell off and have a lot of risk coming off, people just liquidating and saying, fuck it, I don't want to deal with it with March 11th and the BTFP Fed emergency fund expiring. Then I start to look at other ones that are equally shaky. And to see, just to watch them, right? If the same kind of thing starts to come into them, I'm not a bank guy. I can't read these balance sheets the way that people, it's their bread and butter, can. But you can play momentum on them, light and smart, and not try and get down to some free contracts and swing for potential breakdown. But
Sure.
COLB is the next one that I'm looking at.
COLB.
Charts, yeah, it also, dumps pretty hard off earnings, and it felt it today.
This is commercial real estate also.
Real estate also. I'm guessing, yeah. I haven't looked into them. I just kind of was playing the chart and just put them on the watch list, right?
Yeah, provides commercial and retail
But again,
banking
they're
services.
coming into that clean level as well. See on the chart, right? So below that, you could see some
Really just dips
similar
under
price
19.
action where
Yeah.
it's under 19 now. It's like 1850.
Well, it's done
So
this.
this is
It's
the
done it
area
a few
which is
times.
This is where you watch it and you see if like the momentum comes in and it breaks it under 18, and that could create a bit of a sell-off. But there's a few charts that I'm watching because they're coming into trend lines or breaking trend lines that have been there since last year. So BKU is one.
This one looks decent. Yeah, this one looks decent for downside.
If you just draw that line right from,
Yep. I know
just
what
want
you're
you to
looking
draw
at.
the trend line. 'Cause I want you to see on the other ones. WAL, you'll see the exact same trend line.
So you're just looking to short the whole, real estate sector, right?
I've been focused on banks for a while with the BTFP, back burner, but BTFP expiring on March 11th. And I think that we're going to see some shit when that backstop is gone. So I'm trying to see who are the shakiest, and I'm not like jumping in ahead of anything. I'm just looking for charting them out and looking for setting some levels and looking for momentum. You see the same exact trend line on WAL, and then VLY actually broke the trend line today. So that's the one that I'd like to maybe do some.
These regional banks, dude. I've never heard of any of these tickers.
Me neither. I mean, it's not a familiar sector to me, right? I mean, just what I learned last March.
Yeah.
But when I see a pattern, right? If you draw that trend line, you see that's the one that broke.
Do you think so? You were pretty committed to this idea intraday. I mean, you know, we could attribute some of it to earnings, but do you think maybe some of that sentiment was voiced in their reports, and that's why they've kind of seen a wave of this selling over the last 2 weeks? Like, is this
right? So I can't speak to it, but I think it's more a case of they're legally required to reveal certain information, right? On the calls, they're never going to voice the concerns, right? When SVB collapsed, the CEO was out there saying everything's fine, don't sell. It was the dumbest call he ever could have made. But when you look at the books, right? You look at the books and people don't like what they see. They really didn't like it in COLB. They really didn't like it in NYCB. When they don't like it, the first wave starts to sell, and then there's always contagion risk, right? These things can get out of control. I'm not saying they will, but it's the kind of thing that I look at because it will have a broader impact if it starts to have a broader impact in the sector.
Yeah.
So if you see, NYCB could be a one-off, right? But if we see at-risk start in other spots, it can only ignore it for so long, especially when we're at a point that is just so kind of crazy.
Sure.
So I just wanted to get your thoughts on these charts, or just general thoughts.
I mean, looking at it.
Let me second that first, Wax. If you look at the link that I just sent, it's just talking about, what I just filled in as this point there. Real estate exposure right now, highest, and it's at the highest point of concern that it's been in a long time. If you look at that link that I sent, so kind of riding this one with him. He and I have been going back and forth on these smaller banks for a year now, I think. So yeah, I'll hand it back off to you, Wax, but check that link out.
Not only that, but I've been seeing a bunch of data recently on default rates, among both. It's more in the it's more in the housing and small loan sector than commercial real estate. But these rates are kind of affecting everyone, right? Not only from commercial with prices and rent, but also just car loan and single family home loan defaults are at highs not seen since the Great Depression. So um it's definitely something I've got my eyes on. And if anything was going to break, it would probably be that sector first. I don't think, with the jobs market still so strong, I don't think it's going to be something inflationary. But if anything, it would probably be, all these vacancies and all these companies that own these buildings that are just making $0 on rent or anything like that. It completely makes sense to me. Um, and looking at a lot of these charts, there's no way that they all just had poor quarters. I think maybe one bank, you know, if I'm just thinking logically, if I'm just trying to kind of connect the dots, I would probably assume maybe one of these regional banks on their recent earnings call voiced their concerns about that backstop going away in March, and it kind of made a snowball effect across the sector. Because to me, I don't think these sell-offs are justified for some of the numbers that I've seen on these earnings reports. Just looking through the few names that we've looked at, it doesn't look like anyone's missed atrociously. The only bad thing that I saw was on, what was it? Was it WAL? Was it that one? What was the one right before that? CU something?
VLY, WAL, and BCU.
BCU. Uh, are you sure it was BCU?
Yeah,
CBU.
um,
No, there was one I saw that like their dividend, they cut their dividend. That's the only one that I could see would maybe come from like a normal.
LP,
Which one? CUO.
COLP.
Yeah.
Oh, LP.
No, it wasn't this one. One of them I saw that they had cut their dividend. But anyways, um, I think that's likely what happened. Is I don't think you're the only person thinking about this. I guarantee you, every single board of executives in these regional banks is thinking the exact same thing, right? Whether they are as concerned or not as you is up for debate. But I think that this sell off is likely not due to just all regional banks having a shitty earnings, right? I think it's more than likely that those concerns were voiced and it created a snowball effect. So my only
Yeah,
concern
I
is that
think,
you may be, even though the backstop doesn't get, removed until March, maybe people are pricing in the fact that it will be gone.
I think, I was looking at stuff months ago. There are people that start this thing, you know, but obviously that people wait to the last minute. And I think still I'm early in it. It may not happen at all. But, the last mini crisis, it wasn't based on earnings as much as it was market assets, right? So now my thinking is that, because NYCB, its commercial real estate portfolio caused such waves of that earnings report that they may be looking into, which banks have the riskiest CRE portfolios, and some people are early risking off there. And if we do get a crash, I mean, all of this is preliminary, right? It's precautionary. I'm not taking action on anything. Just kind of, it's in my head. This is a place to talk it through. But um, maybe people are starting to look through the same way they looked through last time, who had the most mark-to-market assets. And they started to risk off in those names. Then it kind of turned into contagion, and then we had a couple go down, and we had a bunch of names that were selling off hard, and predict which one was going to collapse. And the ones that didn't, they got bought back up, right? All of it. But I think that's what's happening here. Maybe is that they're looking at the commercial real estate ports and precautionary. What's the word I'm looking for? Anyway, in advance, they're risking off. Certain people they're risking off, and that may kind of snowball and face potentially a collapse or two. Maybe we don't see any, but when I see a canary in the coal mine, I want to start paying attention to it and try and figure out the pattern. And you always have great input as well, so I figured I'd bring it up.
What is the regional banking ETF?
KRE.
KRE, that's it. Okay. So
Just I'm under a pretty interesting area.
yeah, 45 is probably the area I'd be looking at too. Maybe a little bit closer to 43. But yeah, you're right. I don't know. This feels more like a fundamental thing. It's always good to mix fundamentals with technicals, but I would probably expect this sector to just be shaky overall leading into that kind of March, deadline. Um, in knowing kind of what it is, it's like it's not going to be immediate. I think the reaction that we're seeing is that it's just less safety. It's like for example, if um like think about corporate bonds, right? Think about Apple or not Apple. Apple's the worst example possible. Think about someone like Meta, right? When Meta tanked over the last during 2022, when Meta dumped it, right? They had announced free cash flow. Their free cash flow dropped during this earnings. Their free cash flow dumped. Wait, it was this earnings. They took a spill from here to here over the course of 8 months. Their free cash flow had dropped from 16 billion to under $1 billion, right? It had been cut by 85% plus. And so their corporate bonds, right, skyrocketed. The rate on those skyrocketed because it became much more likely, even though it's Meta, they still have money and they still have outstanding loans with cash. Even though it was still extremely likely, the likelihood of them defaulting on their bonds skyrocketed. So what happened, right? The rates on those flew sky high. So it's the same thing here, whereas like you're almost being compensated for additional risk. And so I don't think it's going to have the inverse effect on these individual stocks like COLB and WAL, like all those. It's going to have the inverse effect, whereas like people are just like you said, they're de-risking, right? Because there's a greater likelihood of something, going wrong, right? That's really all I think this is over the last earnings report, a lot of these CEOs maybe voiced some sentiment of fear for that March deadline. And now you're just seeing that kind of reaction of, okay, well, I need to de-risk. And you nailed it on the head, but that's all I think this is. And it's not going to be an immediate reaction. Like it's not like March was it 11th or 13th. It's not like that date's going to come by and we're going to see, half of all regional banks declare bankruptcy, you know. It's it's gonna be one or two banks kind of struggle, and then everyone and their mom is gonna look at their holdings and look at kind of what they're stuck holding the bag on, and then we'll see some chain reaction, like exactly what happened with SVB, right? Once SVB kind of hit the fan, everyone else looked at every other regional bank, and that's why we had a few more closures, was because took a deeper look at the books, right? And who knows? There's a good chance people are already doing that right now as we speak.
That's what I think is happening, right? The way SVB until really started collapsing, but it was bleeding earlier, and some other names were de-risking earlier before they came else. Trying to take an early look in the sector and see which names may be showing signs that they may be the weak points, and if we really do get moving, which probably doesn't happen, right? March 11th may be a Y2K kind of thing, who knows? But some of y'all are actually, it's a bad reference. Y'all are probably too young.
Oh,
But
chill.
just being prepared, paying attention, and I think we're at a spot where we've been constantly looking for reason to risk off and to pull back. We're just not doing it. And if this is potential catalyst, right? I mean, if it really does get going, the market can't ignore it. They're not going to freak out about it right now or even for weeks, but just getting ahead of things.
Kick the can down the road,
I don't
But
here bank wise, and it's kind of the opposite of the rhetoric that we've been seeing, right? This was like record earnings for this company whenever they reported last week. And, like I also just kind of look at like done some sketchy shit. Like this is a bank that gave that $100 million loan. It was last year. Figures AX, and it's like since it means what, a week, 2 weeks ago, it's lost $10 a share. So it's just kind of sitting on a cliff right now. If you look at it on the chart.
Yeah, it's definitely got room lower.
Yeah.
Is there something you're looking to do with this, play wise, or?
Yeah, I mean, probably short it, but I just also in wax, I guess, sentiment wise on like, also it's like we talk about these banks with a lot of commercial real estate, those are being like the sketchy ones, but I also look at this bank here that just had record earnings, but also just dumped off $10 a share a week. Like, would we? And as you look at the chart right there, it's sitting on a cliff. Like I kind of have my eyes on this a little bit just because of this big ass gap down to what is it? Like, yeah, like
always buy the rumor, sell the facts. Always.
So this is a very large bank, from the looks of it.
It is. It's much bigger than the ones that we're looking at.
Actually, it's not that big. It's only a $3 billion. Yeah, it's not huge. It's definitely not huge.
It's bigger. It's bigger though.
It is. It's bigger than a lot of those regional banks that we were looking at. But this is, so just reading through their security offerings. This is, they fit right in: commercial mortgage loans, commercial real estate secured loans. Right. The one thing that I'm kind of like, asset backed lines of credit. So who knows how much of their loans are collateralized by assets. That could be one of the reasons why they haven't seen such a crazy reaction compared to a lot of the other names, right? But yeah, they're still just as knees deep with the rest of them. Commercial real estate secured loans, commercial and industrial non-real estate. They're in there. Half of all their listings here are commercial based. So I mean, yeah, you guys are on the right path. I think this is one of those plays where it's just like time will tell. And again, I would definitely look back into a few of these companies' earnings and see if you can't find the rat. See if you can't find the one that mentioned that, um, what is it? What, what was the funding? BTFD?
BTFP. The BTFD is what we do every day.
Yes, I know. I don't know. I remember we signed that last March, to kind of, that was the bailout.
Yeah, last March 11th.
Yeah.
So
Yeah.
1 year expiration.
Okay.
And they, instead of using it to fix their books, they used it as an arbitrage to capitalize on the difference between the treasury rates and the BTFP interest rate.
Oh shit.
$40 billion. One of the things that drove the banks so fucking high over the last year was they were getting free money from the Fed. And only like last week did Powell say they were closing that loop.
Yep.
Well, it's definitely something to keep an eye on, and I'll keep it in the back of my head over the next few weeks, leading into that March deadline. It's March 11th. Yeah.
11th, yeah.
Sweet.
And that's also around the time of reverse repo is set to run in. There's a lot going on in March.
All right.
Be an interesting time for sure.
Well, I want to help. I want to make sure everyone gets a chance to get some stuff covered. Daniel, I've seen you unmute and mute a few times. You got something, man? Daniel, now's your time. Speak now or forever hold your peace. Okay, there you are.
It's on mute. I want to see Apple. Possibly, I'm in calls.
How far dated? Okay, it's not as far as I would have liked, but where'd you enter?
Down.
When did you enter?
Maybe at the date.
Today, yesterday, a week ago? Okay, all right. I think you're fine. Honestly, it's rebounded off this 180 area for the third time. It's continuing to hold value higher. Um, it didn't really feel much of the sentiment from the rest of the market recently, which is a little bit concerning. But if market stays strong, Apple stays strong, I think it's more than likely we'll continue to test this 195 to 200 area before anything major happens. Um, if you're looking for targets, I generally like just anything. Let's see where our volume taper is. That'll probably just be easier. That doesn't help us much. Let's cut it off right about.
200, 200's like, is that like a good target? It's like a whole number right there.
It is, but we haven't touched 200 yet, and um, I'm trying to figure out like what the actual level is. So your volume really tapers off about 195, and you've seen some overshoots above 197. So this should be your primary target, about 195 to 197. And then if you want to reduce it to runners and maybe, look for a continuation into 200, sure. But don't go gunning for the moon looking for 200. I feel like you should definitely be honestly, I was going to say this 192 area, you should probably take a trim first. Um I would say targets 192, 195 to 197, and then if you're lucky, you should be able to smack 200. But again, you are definitely confined with your time. I think, a move from, believe it or not, $10 on Apple is big money. So, it may waste some of your time with some choppy days. It's not going to be a straight line here back into 200. So just be mindful of that. And if you are offered 192 in the next couple days, lock that in, reduce risk, set your trails at break even, and then continue looking for that 195 to 197 area. What strike is your contract? Ooh, yeah. Okay. Yeah, you're definitely going to want to scale out of those sooner than later. Just because as a month ticks slower and slower, if you get hit with just a couple choppy days, those contracts are going to lose a good bit of value. So you definitely want to, hit that 192 level, lock something in, and you know, probably take a good chunk of those off. To be honest.
Should be enough time.
Yeah, yeah, yeah. I think we'll see higher in the next month. It's just about how slow it goes. I'm not gonna try and call a top on Apple at all. I think you will see this 197 area again. But whether it's in a week, a month, or in 3 months, I couldn't tell you. We're in the middle of a balance here, and we're pretty much just contesting highs with some large ranging action. So, it may take a bit. I'm just a little concerned with your strike and date.
Yeah, that's my mistake. But
If you had
like
sorry.
like the market right now is kind of like holding overall, saying that Apple's going to follow the market, but that's like one of the next big stocks out there.
Yeah.
But typically, I think February goes down a little bit, and then it'll go back up in March. I think February is going to be a little bit of a historically, it kind of goes down a lot.
Yeah, cyclically it is typically a slower month.
And then and then it just shoots up for 6 months after this, so who knows? But yeah.
Yeah, if you had like 195 calls, I'd say yeah, shoot for the stars, shoot for 200. You've got time and room, but just 210 seems really far that I feel like they won't get close enough to the money to really start making much unless we get a pretty sizable move quickly. So just be careful with it. Like I said, 192, definitely lock a good chunk in, and then maybe let runners go to 197, 195 to 197.
Yeah, I'll keep my fingers crossed. I'll be in green if it gets that high for sure, but just keep my fingers crossed.
Yep. All right. Captain. Captain. How's your night going?
What's up? How are you? How's yours?
Doing good, doing good. Had a nice little scalp day, but nothing crazy. Play anything today?
Yeah, so two things. Two. I picked up some Carvana midday.
Ooh. Okay.
Just on a midday, right on the retest
Oh.
of the. I don't have the chart up right now because I'm driving.
This thing actually doesn't look too bad.
I wanted to ask, do you think it's going anywhere else? Do you think the move is kind of done for this week?
Well, I was gonna say.
This downtrend here
Yeah. So you entered today.
today. Yeah,
When?
like as this thing gained some movement. So after it gained some movement and pulled back, that kind of major pullback there, right around the bottom is where I got in.
Okay, cool, good. Honestly, bigger picture, I like it. I think it looks solid. You know, it pulled back from highs, had a little bit of a blow off top, and then it's spent the last few weeks here bouncing over 40, and it's continued to catch a bid. It looks solid. This is a much nicer, higher low. The only thing is, you know, you're gonna fight this spot, right? This 49 area has hosted your last two pivots. And above that, you've got room. If it can crack through this 49 area with some strength, it should give you a straight push right into this 53 area. For one, that was the breakdown spot, and you've also got some heavy pivots back here. I would imagine if this thing can show some strength over 59, you've got a clear route into 53. But you know, you've got earnings. You still got 2 weeks, but yeah, it looks solid. I think it's built a nice.
Yeah. Right now, trying to keep this like short term, like I don't want to be definitely. Check this fire like the next week. I'm not looking to really swing this through earnings. If I wanted to, I kind of pick up something later date. Maybe kind of add an extra week there. But if we don't get that straight plus through 49, I might pick up something longer. But as of right now, I might just scale out. It says like if we get that immediately pushed through 49, I'll kind of hold these a little bit. But if we get any sort of rejection on 49, like you're saying, I think it might not be a bad idea to just get out of the contract I have and wait for another opportunity.
Yes, exactly. I think you're right on there. Were you so you got that dip into what was it, 46? You're up $2. That should have
Pretty much.
yeah, you should have made some decent money on your contracts. Which ones do you have?
I can't check right now, unfortunately. I can tell you, I'll be stopped in probably about 20 minutes that I can tell you, but currently I can't.
Okay. Do you know if they're weeklies or do you have time?
If I can imagine, I think I have some 30, I want to say.
For this week, did you buy time?
I think I can check. I'll tell you right now.
Okay.
I have this week 48.
Ooh, okay, so yeah, while we're up here near 49, you should probably just call it, honestly. You should probably just lock it in.
That's what I'm thinking as well.
Yeah.
For some reason I thought they were next week, but this week, yeah. I now extremely agree with as soon as you touch that 49 pivot, to get out.
Yeah. I was gonna say if you had next week's, even if you had next week's, I'd still say probably lock in a good chunk here at 49.
Yeah. Alright, got it. Then the second one I picked up yesterday and then I added to today was Airbnb.
Okay, that's a fun one. What are you looking to do with it? Are you expecting the breakout here over 150 or are you shorting it?
I am expecting to I'm looking for the break here with earnings coming. I have earnings included in my contract. So I have the kind of IV advantage as we get the run up towards it. I'm kind of looking for this breakout over this massive range we've had. And any break under kind of where we are right now, it's just consolidate what I'm looking for.
Okay, I like it, but I don't think you're gonna get any move before earnings. It's got earnings on Monday.
Right.
If you have time, it's up to you whether you want to swing it through earnings or not. But
so I'm not the week of earnings. I have a week after that.
yeah, so then it's up to you. The contracts, they're only gonna pick up an IV. This thing could reject $2 either direction, up or down tomorrow. It's not gonna change your contracts much just because of when earnings is. So technicals, it's not gonna, my technical analysis here is not gonna benefit you at all. Um, it's purely gonna be based on how the earnings go, and what's your strike? What's your? I know you have a couple weeks past earnings, but what's your strike on them?
Let me see. My strike on those is 155.
That's fine. Yeah, if you're holding through earnings, that's fine.
Yeah. Yeah.
But
So I kind of, yeah. So I was, yeah. So I was kind of looking through that earnings run up here. But you don't think we're gonna get it? You think it's just gonna be purely based off that earnings move?
I don't think it's gonna move much before earnings. They would have already ran. They would have already gone for it, I think.
Yeah.
And I'll be completely honest, thinking intuitively about Airbnb, think about their, you know, they may not seem like a luxury brand, but they are. Their whole brand is travel, you know. And if you think about the inflationary climate, if you think about, prices, you know, a lot of their vacancy rates have been a lot higher. I don't I wouldn't be expecting a great earnings. So I'm not saying if you're convicted, trust me, I've been wrong about earnings predictions a million times, and I'll be wrong probably a million and one more times, right? It's my thoughts on earnings. It's always a guess, it's always a gamble. You never know how the company really did unless you work for them. But at the end of the day, just thinking intuitively about it, I'd be very surprised to see a really strong earnings to send them a lot higher.
Got it. Okay. Okay. Yeah, that makes sense. And so the other question, kind of on the same earnings topic, their last earnings like was kind of nuts. And then the evaluation for this one is significantly lower.
If I remember correctly, they had so much more earnings. It was some cop out reason. There's a reason they didn't go flying off of it. It was some um let me just look it up real quick and get you hard information, cuz I don't want to talk out of my ass here, but it was some cop out reason. I remember whether I don't know if they restructured some debt, or if they like if they kicked a bunch of people off the platform or something, but there was some cop out reason for why their EPS was so high and they didn't get a solid move off of it. Let me just get it for you. Airbnb earnings. What was the date of it? 10/31/2023. Let's see. Financials. Quarterly revenue. Here we go. I'm just looking. I can't see it honestly. There's not much. I can't find the news. I'm looking at purely data, and I don't have. We don't have the time to work through a bunch of figures here to figure out why that might be. But I think it was. Yeah,
Yeah. So
yeah.
I don't sort of
Yeah, they would have if their EPS, because think about it, if their earnings actually like quintupled, there would be we would get a much bigger reaction to this. Um, but it was some cop out reason that if I remember correctly, I honestly think it was like a debt restructuring deal. That increased their pre tax income. Um, but I'm not 100% sure. Again, I'll check that out and I'll get back to you on it later on. But yeah.
do my yeah. Okay. So I guess excuse me. Where we are.
Typically, I mean, it can do whatever. If it didn't have earnings, in a few days, I would honestly say that, this seems like a pretty decent long just because, you've contested this 150 area. This is the fourth time you're pulling back, and now you're starting to see some buy pressure over the last 4 days, right? You're seeing some wicks under this 44 area, and they're saving it each time. I'd be willing to risk longs here, just risking against like a daily close under like 43 or something. Um, I mean, from a structural standpoint, it looks fine, but again, structure and technicals don't really mean much leading into earnings. There's a good chance it just kind of, like you said, stalemates here for a few days leading into it. Yes. Yeah. You can't, unfortunately. If anything, you could sell contracts against it. For example, it doesn't matter unless you know. The only way you could exploit that data to your advantage is if you knew what the earnings was going to be and you could accurately predict the reaction. So, for example, let's say Airbnb was pricing in a $10 move in either direction, right? And you're holding calls. Granted, if you are, let's say it only moves $5 to the upside. If you're selling, let me think about this real quick. If you're selling calls or puts, honestly, if you're selling contracts, you'd make money. If it only moves $5 in either direction. If you're selling calls or puts, they would both experience an IV crush. Okay. So if you're selling contracts, that IV death that results in the lack of high expectations of price action or price movement dying off, you'd make money. But if you're holding calls and let's say it moves $25, it doesn't really matter. Your contracts are going to far supersede the expected move, and they'll even if IV dies in the morning, which it will, it's presumed that your contracts will be deeper in the money than the premium you paid, right? So you'll still make money. But there's no real way to capitalize off of that data before earnings unless you know the earnings.
Right. Right.
So if the expected moves, just like we said, if it's $10, if the stock moves, $5 in either direction, if you're selling contracts, you'll profit because the IV crush will destroy the premiums. Otherwise, yes, otherwise, if it exceeds that range, that expected move, you just need to be hoping that you're holding the right side of options, whether it's 25 moves downside with puts or $25 of upside with longs. But yeah, it's useful because you know how much like you know like what the expected move is, and you can kind of use some sort of realistic expectations. But
Would you use those contract selling as kind of a hedge in a way?
I hadn't thought about that before. You probably could. Yeah, that could be a decent way to hedge against earnings, but it could also totally screw you over. Let's say you're let's say you're long on Airbnb, right? Let's use your contracts for example. If I'm hedging with let's say I'm selling calls, right?
Right.
You're in a long position and you're hedging by selling calls, right? That would be the logical move, right? If this thing absolutely died, okay? Um well, actually no. No, because your call premiums would die too. Yeah, no, that'd be an okay hedge. That'd be an okay
I
hedge.
mean, you're right. Yeah. Because then, yeah, because you could technically just hedge by buying puts the other direction, but then if it goes nowhere,
You're screwed on both sides, yeah.
But if you sell calls as your hedge, you kind of gain a little bit of exposure to each.
Yes, but you can only make what the premiums lose in value. So
Right. Yeah. Of course, yeah. It's not. I mean, not the greatest hedge in the world, but it'd be something.
yeah, with selling options, your gain is unfortunately capped. But um, okay, yeah, no, it looks like you could hedge that way potentially. I haven't thought about that to be honest. I typically play naked single leg options for every play I take. So,
Mhm.
but yeah, good thinking there. I personally wouldn't do it because I just don't play earnings
Yeah.
like that. But you could if you wanted to. All right. Cover some good stuff. Vincent, how's your night going, man?
What's good, Wax?
Feeling good. Feeling all right. I'm about to get a burger after this session, man. I'm hungry. What are you guys up to?
Right.
Make any money today?
Well, no, I didn't. 'Cause I told you I want to go shadow. But I didn't get a chance to hop on the stock market, but I do have a few questions for you.
Sure. What's up?
Okay. Thanks. So is a lower low followed by a higher high a breakup structure? Does it have to be
Lower.
both a low
Wait.
and
Wait. A lower low followed by a higher high.
higher high?
I gotta think about this. So a lower low. Okay. No, that would be a funky chart, my man. A lower low followed by a higher high. There's no trend there.
Okay.
So here, check this out. Check this out. If a chart did this, right? I can't draw. Why can't I draw? Am I zoomed in too much? Yeah, okay. So let's say a chart is just trending along, right? Boom.
Right.
Let's say it makes a lower low. Okay, lower low, and then it makes a higher high. That's, I mean, shit, you'd imagine, okay, this is bullish, right? But, are you entering up here or are you entering on this break? That's pretty bad risk to reward. Because if
Right.
if your only confirmation is this break, where's your confirmation that you're wrong? What about this technically tells you that you're wrong on the position? Would you wait for a break all the way for the previous low like that? Or would your stop loss be a break of this low? Either way, your risk to reward is pretty awful. You know what I mean? Because it could easily do this. It could easily make another higher low and then keep going, right? And there would be nothing wrong with the position. So,
Okay.
it's very tough. To me, a lower low followed by a higher high, it's not a very confident trend you really want to be playing.
Okay. Okay. I see.
I know this was very very rough around the edges, but do you get what I'm saying?
Absolutely. Okay. Okay. That makes sense.
But you
Okay.
had a question that you were leading that into. I feel like I cut you off to talk about that. What's up?
Is wait 1 second. I guess wait. Okay. So can you go over volume profile and how it affects fair value gaps again? I'm having trouble understanding that, Elias.
Sure. So at its base, all volume profile does is reorganize volume by price instead of by time. Okay. So we're gonna use ES because this will kind of benefit everyone. And will also give us targets for when we eventually do pivot and sell off. So, let's see. So here's a pretty decent fair value gap that has been explored a number of times, and this big one that we have made multiple trips through. So all volume profile does is reorganize volume by price instead of by time, and this is where liquidity is. This is where pools of liquidity are sitting, and this is where there are areas that are most likely to have sitting orders. So on this whole sell-off, right, there were three spots maybe, where people were likely setting their orders. One is the bottom of this volume taper, where it was proven we had bounced 1, 2, 3 times, right? So this volume taper right here at about 435. The next spot would be the pivot low where buyers were previously, and you can see we did a little dance there for about 3 days and they tried and failed. And then the third spot is this lower volume shelf. And you can see what happened right when we broke into that volume shelf. Boing, big old bounce, right?
Right.
So all this is when prices in between liquidity gaps, price outsearches liquidity. So you're very likely to typically conditions need to be right to get a clean move from shelf to shelf directly. But um, at the basis, price is going to move a lot easier through these low liquidity zones because there's no one spot where large orders can conglomerate, right? Like we said, because this is where liquidity is and this is where people have historically been willing to do business, that's why there were so many sitting orders ready to be filled down here. The whole way down right here, you might have had people trying to long 428. You had other people trying to long the pivot low at 425. You had other people who kind of won for a day or so at 422, right? There's no spot where mass orders can conglomerate to input a bottom. So buy orders can get sold through extremely quickly, right? Because if I place an order for 1 million shares, if we're in the middle of a heavy downtrend and I'm the only person trying to bid that spot, we could sell far more than 1 million shares really quickly, right? And cut right through it. So, again, that's a pretty major example, but um, you know, look at what happens when we move through this liquidity, right? We got this breakout and we pretty much found our next spot. This shelf was already in existence from all this action previously, right? So this was a logical target for us. Granted, I'd probably be reducing risk at that first kind of taper. But yeah, this is the liquidity gap. This is the liquidity gap. And right now, we've done no historical price action here. Every single day we're building value up here and building a shelf. So there'll be nothing up here until we spend a good amount of time, maybe it could be a few months worth of action up here, right? And you could very easily see, let's say we sell off and we defend the previous all-time high and we start dancing above, this 481 spot, right? Guess what you're going to see? You're going to see a massive volume shelf or a liquidity gap formed here, right?
Oh, right. Yeah, I see. See.
So because there's nothing, our next major volume spot is 460 and under. This 460 to 455 area is where the next like major liquidity zone is. Everything up here is completely empty. But yeah, that's just in a nutshell kind of how it is. But if you want to get more fine-tuned, we can look at today's action, right? Or shoot, this is not the best example, but look at where most of the volume has been done, right? Your taper is all the way up here. You could make two arguments. You could say it's either 77 or you could say it's 76. It's pretty tight actually. And then your fade is 55. So the first few days, this when we made this action right here, this was all-time highs. So there was nothing here to base anything off of. And same with this. This was an all-time high. There was no previous volume to base any decision making off of. So we had to spend a few days kind of building this out before we knew where liquidity had pooled. And now it made today an actually pretty simple trading day. I got a bit frustrated because I just don't like chop, but you could have risked against this 55 level so many times using this same spot, right? Look at this massive shelf we built. I'm gonna highlight it as a zone, just like I said, right? We're gonna use 76 as our taper and 55 because that's the level I've been using, right? We extend that out for I don't know, 10 days, 15 days. And look at how clean it is. Look at this range to top to bottom action. We got this breakdown, and of course, it wasn't able to follow through. We got a higher low, and sure enough, they bid it right back up. So range to range, top to bottom, right? Look at where sellers are sitting, right against the top of that taper, because we want to stay with liquidity. We're basically just building price acceptance at all-time highs, and that's another reason why kind of liquidity is being stacked here in a shelf, right?
Right.
So let's also do this real quick. I want to flip it out and maybe make it 15 days. See if we can't get a nice clean read. So let's use this exact time frame, but I'm just going to increase this. We'll make it a 30-minute. Beautiful. Okay. So let's see where are we working with here. this is a big volume gap that I was actually looking to play. You know, remember when I said last week how I took the loss right here because I was looking for this breakdown, right?
yeah,
I was looking for this volume gap to get explored. Well, now we've got another one here. It's not super big because a lot of dips have kind of extended this range lower. It would have been, you know, had we not seen these two dips right here, this taper would still be sitting up around 55 and we would only have one big shelf right here. This wouldn't really be here. This 2 days of action wouldn't be enough to stack that out as much as it was, but these dips were done on high volume. You can see, you know, that one dip, look at that high volume during the beginning half of the day, right? And then same here, right? This is that first opening drive, you know, there's a lot of volume done in the beginning of the day. So these two zones right here is what extended this shelf lower. But essentially, if we do break under 55 and really commit to it, they already made the move once. You know, it should be a straight move back into 30, right? And look where buyers showed up right off that previous taper. I don't know. I know I'm all over the place right now. I know. I'm trying to like hit everything at once. Maybe if we could refine the question a little bit further. Is there a specific aspect of volume profile you're looking to hit on?
Um, no, I guess not specifically. I'm just trying to. Can you repeat the last part of what you said? Yeah, can you just repeat the last part of what you said?
About what? Give me some keywords.
Yes, can you really explain like this how this liquidity gap formed because or sorry, and I know you can't see my cursor, but how the liquidity gap 4940 formed because of that V shape.
Okay, so this action was done very fast, right? But this guy, this right here, this you see how there's kind of like two shelves here, but generally your volume is like generally speaking, your volume is it's a little bit bigger. You can make the argument that it's that big, right?
Okay.
The reason why this lower half and it's kind of split here is because this is here because of the previous days of action we've spent here. The bottom half, you could argue most of it's from this, but a lot of it is from these two pivots, right? These two. And the reason why, even though they didn't take very long, they were both in the early section, this is where we kind of used volume by time. So the morning action, as you know, is when the most trades are taken, right? That they call it, you know, the first hour of the day and then power hour, right? And you can see it's a normal trend. The day starts off with a lot of volume, and then the end of the day gets a little spike usually, right? So the beginning of the day has the most volume, and then a small spike into close. Beginning of the day, small spike into the close. It's that's how every day works. You can look back as far as you can. Every day is the same pretty much. You're going to get the most volume in the middle of the day and then a little bit after. The only reason this one is kind of midday is because this was FOMC. But look at the timing, right? Look at the timing of this. Where did that occur? Beginning of the day, right? Same thing here. Where did this occur? Beginning of the day. So the reason why this shelf stacked out further is because this action that was high volume, granted it was higher volume than the previous few days minus FOMC, is because it was done on high volume. Jesus, bro, I'm sorry, my dog's going fucking crazy. Anyways, that is why this shelf has stacked out because the volume that was outside of the range or an area that was previously low volume, they introduced a good amount of volume and liquidity through that action. If I want to give you something to kind of like play by, let's look at just. Yeah.
Okay. Why is that affecting? If you go to Monday, like closest to us, the Monday before that, but like when there's a huge green candle. Yeah. Yeah, right there. Yeah. Why is there a big liquidity gap there, even though volume's higher on that bullish candle? Yeah, exactly. Yeah, pretty much. Yeah.
Because the move was made very quickly. It didn't have time. We didn't have time to actually spend any time there, and people were more.
But in the other one, but in the other one, like on the Friday Sunday that you were talking about with the V shade,
Yeah.
that also didn't have like doesn't really have that much time to meet, no, and it also had a lot of volume, and you were saying that it's fine to bring in display the volume profile.
So looking at this shelf here, we spent the whole overnight section here, right? So this section was already being developed. And then this was done on high volume, and we made the rounds twice, right? So this is one lap through, 1, 2, 3, 4. This was 4 high volatility events that happened in that space. This is one that didn't really last long. You know, it was a quick one. Granted, this was quick too, but we spent double the time working back through it.
I see that. Okay, that makes sense. Frequency, right? Obviously, the frequency of us going through that space matters as well as volume.
Yeah. So what I was gonna say is if you look at this, right? Check this chart out. How we drew this zone here, right? The reason we drew that zone, it only would have been like this if let's say, what's today? The 6th. Let's cut this time frame off. So it starts on 1:30. So 1:30, and let's cut it off to yesterday's. So this is what the chart would have looked like coming into the day. Oh, that cut off more time than I wanted. Did it actually? What is all of this? What am I getting extra here? 5-minute 5 dip. Oh, it's 1:31. That's why. Okay. 1:31 to yesterday. So this is what the action looked like coming into the day. Okay. You could have very easily this morning looked at this and gone, okay, we've stacked volume here. This is a liquidity gap. Okay. There's a little bit of something here, right? And that's mostly due to these guys, these pivots. But you would generally look at this and go, this is my main shelf, and here's a bigger one. But if I was looking at this chart and I was thinking, okay, I'm looking for a breakdown, there's a few spots I would know I needed to get through. First of all, we have to get under this 55 spot, right? Nothing's happening lower until we break 55. Once we break that, I probably would have drawn something around this shelf. So I might have gone like, I probably would have gone, okay, bottom of this. So 40 is a good benchmark. I had this level previously, and it lines up with a bigger shelf taper as well. So I would have gone 30. And then the next spot I would have been looking for is probably close to this 15 area right there, right? And again, these are all based on volume profile. I don't really care what the price action did during that, because there's nothing really of value happening here at 15. It's just, that's where liquidity is pooled. This is where I can have confidence that orders are going to be sitting, right? But coming into the day, you could have easily looked at this and gone, okay, where is our volume taper? Right? So you could argue it's 46, you could bump it up, you could even argue it's as high as 48 to 49 or 78 to 79. You could have gone like this, you could have made a zone, right? Let's go like this. We'll encompass the whole thing. So there's no excuses here. So 48 to 79 all the way to 76 all the way to 79. Right? And we'll extend that out a few days. Okay. So there's that one. And then the bottom, there's, I would have used 55 down to maybe 53. Okay. And then we'll stretch that out a couple days. Bada boom. And then when you look at today's action, right? Look at how it played out. Right? You would have had a very clean level to risk shorts against that worked out really nice. Right? And think about this. If you're going range to range, you're risking. So if we break over 80, or you could even give it a little bit more, right? Let's say 83. You're risking even with the not best entry at 76, because you could have entered at 79, they gave you an opportunity there. But at 76, you're risking to 83. That's 7 points, right? You're risking 7 points down to 55 to 21. 21 to 6, that's about 3.5 to 1, right? So that's a great area to risk against. And then from the bottom as well, same thing, right? If you're playing 55, you're risking maybe this one's a little bit tougher just because you do have a pivot low all the way down here. I definitely wouldn't be holding all the way down there. You'd know you're wrong before then. But let's use some of this bottom range action. Let's just use 51 to 50, right? So you're risking 5 points to make 21, right? Same thing. It's 3.5 to 1. So, you know, volume profile in range trading is exceptional. I couldn't trade without it.
So some of the comment which you're just like when it's going from one shelf to the next to the shelf.
Like we've seen this, like this one.
Like yeah, like what if you stay down there and then because you're like
That's tough. That's a tough one.
It's just gonna like come back up from like bouncing from like one shelf to the next.
You don't, honestly. It doesn't typically do that. It doesn't typically do that.
Okay.
I would say this case was just a bit of kind of, people are, if you look at the market trend over the last 3 months, we're extremely bullish. Volatility is extremely low. People are looking at every dip as a discount. So people saw this aggressive sell off and they bought it. And so you think, then we go back to internals, right? Look at this action right here. We sold off, failed to bounce initially, fell all the way into the shelf, which is fine. And then we spent 30 minutes here at low a day. Okay. And this was pre-market. So retail had no hand in this. This actually might have been data, if I'm being completely honest. This is right at 5:30. This was so data. Yeah, this wasn't retail selling. This was some news or data reaction. But regardless, retail got their hands on it and they liked it. But think about normal conditions. Say this is intraday action. If you spent 30 minutes balancing at low of day and you failed one reversal, you got to think there's a good amount of people that are probably entering shorts chasing it down here, right? And it comes a point when you're wrong, right? Like when this bounces and you enter shorts down here, at what point do you stop out? Okay, so somewhere along this line, a lot of shorts stopped out and we had a minor short squeeze. And so it just so happened that the entire move got bought back. Right?
I see.
But
Okay.
if you want like a really clean way to look at volume profile, what I do is typically if we get in a range, let's just use the last 3 days. So from Friday. Friday was the 2nd. So I'll literally just cut my time frame off. 0202. And I'll just do that. And it gives you a really clean reading of your range. See?
Yeah. Okay, I see. Huh.
Because if we go like this, in fact, I'm just going to leave that 77 level marked off because it's going to be important tomorrow if we don't gap up. All right. What was I going to say? Yeah, so if we just go like this, if we just throw on a random time frame, for one, my chart doesn't even encompass it all the way, but like this doesn't really tell me much, if there we go, like this, you wouldn't think much of this shelf here, right? And your taper zone is going to be a little bit skewed, right? Like if I looked at this, I'd think, oh, 73, but in reality, your line in the sand is probably closer to, it's about 5 points higher, the only thing I see clear about this is, oh wow, we've got a very clean liquidity gap here between 40 and 75. That's about the only thing I would take from this chart. If you're using it for intraday trading, I would do what I just said. and just cut it off to the time frame that you want to focus on. And it typically will work best with range trading action. So like over the last 3 days, we've been stuck in this general area. This gave you a really clean read, right? And so you can consistently just play the risk to reward game, right? If it gets up here, short it. If it gets down here, long it, right?
Right. Right. Okay, I see.
But
So Max, when you're making plays, you're generally making them off of like the highs and like off of like the I guess off of like the support and resistance lines like of the actual shelf itself, like rather than like jumping from shelf to shelf.
yeah, typically if you're expecting a move from shelf to shelf, there needs to be either a confluent market sentiment that is going to, you know, warrant that move, or something fundamental like earnings, or something positive in the sector happening. Typically volume will, I mean, there are certain technical aspects you can make or see that will give you an indication like, okay, we're ready to break out from this. But that's a whole different discussion. For now, while you're getting into volume profile, I would just focus on, you know, knowing what areas to risk against when grabbing positions and how to find entries with it.
Right.
Again,
Okay.
you're talking to someone who is a through and through day trader. So when it comes to larger structure, I can give you areas where, if you're looking at a stock and say, oh, I want to buy it, I'll give you a good spot that you could probably start picking up some equities. But it's not something I'd probably be like, oh yeah, this should break through this liquidity gap and head straight to here. That's much harder to tell. But for day
Yeah.
trading, it's very clean, and I use it. I use it extensively.
Right. Okay, great.
Hell yeah. But we did run a little bit later than normal tonight. As you guys know, I've got some basketball bets to attend to. But I hope you guys have a great night. Again, if we didn't get to you guys tonight, I apologize, but please do not hesitate to shoot me a DM or just tag me in chat, and I'll be able to get you an answer as soon as we can. Also, as most of you guys know, these sessions are recorded and they'll be posted on our YouTube in the next day or so, and you guys can fully review these or go back and watch other videos that you want to learn more about. But I hope you guys have a great rest of the night. I'm glad that you guys all showed up. Again, it's really encouraging and motivating to keep doing these, and definitely saw some new faces with the new Tuesday sessions. So we'll continue to do these same time next week. I think maybe Cobain or Hoosier will be hosting a session on Thursday, so look out for that. But on that note, you guys have a great night, and I will see you guys tomorrow.
Thanks, Mark. Take care, man.
Hell yeah, you have a good one, man. All right, later, guys.